Good evening, everybody. This is the forecast for next week, Tuesday the 22nd to Friday the 25th. SPY is making fresh highs, and I'm personally cautiously bullish. Let's look at some bearish signs. The VIX is ridiculously low. It's at 12.50. If you're a contrarian, you should be rather scared about now. Another thing is there is a possible negative divergence between S&P 500 and SPY. As you can see, this channel on the SPY and the counterpart of it on the S&P 500. On the S&P 500, the price is nearing the upper trend line, while on the SPY, it's hugging the bottom trend line. Also notice this trend line on the weekly of the S&P 500. It coincides with the 1500 level, which is a big psychological level, which I don't think we will break. But I'm not a magician, I can't predict the future, so I'll have a stronger opinion as we get closer to that level. Although we are only 25 handles away from it. Otherwise, let's look at the volume profiles. They give us a lot more information than normal candle charts. This is the last 2 weeks on the SPY. As you can see, this is Monday. Monday and the previous Friday stayed above the Thursday's point of control. And the Tuesday's gap down, got bought up on good volume, broke through Thursday's point of control, came back to test it, made a high volume area, and bounced right off of it. On Wednesday, the price gapped down, but there was absolutely no interest in the lower prices. And on Thursday, there was a nice gap up. The price acted very bullishly. The close was kind of disappointing. But the strength in bulls was reaffirmed on Friday. As you can see, there is a nice little bounce right here off of this level. No volume here, no interest whatsoever. The rally came back, made a high volume area around the point of control, and continued north after that, and made a high volume area above, at previous day's high. Taking a look at individual sectors, you can see that financials are at their 3-year highs. They aren't looking too shabby, but I wouldn't be too surprised if they break to the downside, which probably would be terrible for the bulls next week. The technology is not looking overbought, which is good, but it is looking like it might be making a head and shoulders on the weekly. Healthcare is looking rather overextended, and industrials, same here, but they did just break through their 2011 highs on their way to their 2007 year highs. Energy looks like it has some strength left in it. Will probably reach its 2011 highs. Consumer discretionary is looking overextended and somewhat weak. But consumer staples are looking very strong, especially on the weekly chart, breaking through last year's highs. Utilities are probably the best looking sector so far. They had a retrace on the weekly since last summer, and they're looking rather strong right now. And the last sector, materials, is looking overextended, but still some strength left to reach its 2011 highs. Overall, the market looks to be getting overextended and about to reach some major resistance, especially the 1500 level. But the volume profiles and the overall short-term action is still showing strength. So I do believe that we will reach the 1500 level, stay around there for a little bit. Whatever happens then happens. At this point, I do not believe that we will break that level. And this is about wraps it up. Good luck next week and happy trading.